I'm checking out your largest fund, which is the small cap fund, an asset base of about 3,500. This one's done excellently well, returned about 66% over the last 1 year, handsomely beating the index, which has done fantastically well too. When you look at this whole universe, are you able to put a common set of valuation parameters while picking new stocks? How difficult is it to these days to sort of look in the rear view mirror, look at a 66% return in 1 year, and then look at expectations ahead of you, and then maybe decide on stock picking? How difficult is it these days?
Honestly, the easiest way to look at really is that, there is a particular return for the fund, but there was a particular return for benchmark also. So I better to start, with that mindset. Okay, the actual return is a function of what the underlying called small cap as a segment, as a market has done, and what maybe the extra positive or the negative, as the case may be, for any of the funds, because that at least brings that hurdle rate slightly down to manageable levels. Because you're right, 66 is something which is almost impossible to assume for anyone to be able to, let's say, compound. I think better to look at relative to the benchmark move. So to that extent, that's right. I think post the last 12-month run up in broad markets, especially small cap segment, one really has to take a pause to reflect whether it makes sense to really continue to believe in small cap companies to deliver at from the current valuation points. uh, it's slightly tough, and that's where the old adage comes in, that markets move in rotation. There are large caps, there are mid caps, there are small caps, and each of them variables have their own nice interconnectivity. As some large cap company will typically be a consumer or a supplier to a mid and small cap companies. Their own understanding of volume value equation or the price profit pool varies between times, and to that extent, yes, I believe that maybe we reach some of this good set of returns, and that's the time they may just need to consolidate for some time, that sometime maybe 6 months, maybe 9 months, for the time earnings to catch up going ahead, and then you come back. Because let's not forget, exactly a year back had we met, we all verified we're sitting on a base of maybe 50-60% returns on index. We all know how maybe attractively those segments were looking at in the market. It's just that maybe that inflection point perhaps was not visible 1 year back, and not many would have anticipated index itself giving a 50% plus kind of returns. So that's the challenge of markets. There's a challenge of trying to judge incremental market behavior. But from economy side, yes, we do believe that linkage exists, where the kind of growth path India has, there are n number of companies in the Indian market space which have potential to deliver the growth. In fact, look at the universe today, right? We have nearly 510 companies which are $1 billion plus market cap. uh, it's a very large universe, right? You're talking about 100 large caps, 150 mid caps, and the remaining 300 and 360 odd small cap companies available for $1 billion plus market cap. So to that extent, yeah, investable universe is large enough, and that offers reasonable opportunity for from a portfolio pick and portfolio management perspective.